Hi, welcome back. In my previous video, we have verified how the system calculates depreciation values for straight line depreciation method and written down value depreciation methods. We checked both with percentage and with useful life for calculating the depreciation percentage. Now, to make things more complex, let us also try applying more other methods like period controls, maximum values, maximum amounts, maximum percentages to the depreciation key. So let us try creating a new depreciation key. We will create for both straight line depreciation with percentage and written down value with percentage. So let me copy straight line depreciation with percentage. So now let us also ignore maximum amount, but let us apply few methods. So the base method remains the same, it is explicit percentage, but let us now change the declining balance method. So check this. We have created a declining balance method wherein the factor is 2 and the maximum percentage is 25 and the minimum percentage is 5. So let us assign that. And the percentage remains the same, it is 10%, it is straight line depreciation. All other settings are not changed. Save this. Let us also create similarly for written down value method. I am not adding any maximum amount. So here let us change it to Z01. Save it. So both methods are active. Sorry, both keys are active. Now let us update the asset with the new depreciation keys. So we have created this as A010 and this one to be updated as 11. Save the asset and let us check in the Asset Explorer. So if you remember, earlier we received this as 1000 in the straight line depreciation, and for written down value we obtained it as 1220. So now this is the percentage. Maximum percentage is, we enter it as 25% and minimum is 5%. This is written down value method. This is straight line depreciation and the percentage for written down value is 15. So let us try to calculate. Here we are also having a factor. The factor is 2x. So let us try what will be the depreciation for the first period. Depreciation is 10,000 into so the depreciation is 10,000 into 10% into a factor of 2, which is 2000. So what is the total depreciation percentage after multiplying with a factor? It is 10 into 2, which is 20%. So this 20% is lying well between the maximum and the minimum ranges. So there is no impact with this maximum and minimum percentages. So with 20% for the first period, it should be 2000. But we are acquisiting this on 8th of June. So it should not be calculated for 365 days, but at a pro rata basis from the starting of the period, it should be calculated only for 297 days. So this should be by 365 into 297. It should be 1627.397. So similarly, let us try to calculate for return down value method. For the first period, so what is the effective percentage here? It is 15% into 2%, which is 30%. But the maximum is only 25%. So the system will take 25%. It will override the calculated value of 30% and it will take as 25%. So the value is $10,000 into 15%, into 25%. So again, this is for 365 days. So we need to calculate only for 297 days. It is 2034.27. So what is the new net book value? It is 10,000 minus this one. And for the second period, the value is net book value into 25%. And the new net book value is minus this one. So let us check if this is the calculation value in SAP system. So let us try first for the straight line depreciation. Let us update this one. So here if we see, the depreciation value is calculated as 813.70, which is different from what we obtained here. We obtained it as 1627. That means it is twice that what the SAP system has calculated, which means this factor is not taken into consideration. Let us check why. If we go to the configurations, let us go to the declining balance method and let us check the help for this field. So it says the system ignores this multiplication factor when the depreciation is being calculated with an explicit percentage. So in our depreciation key, if you remember, we mentioned as explicit percentage. It is A0010. We mentioned it as percentage. It is explicit percentage. So that is why this factor is not taken into consideration. Now let us change this into useful life. As we cannot, once we mention the useful life, we cannot use a multi-level method which is explicitly mentioned in the percentage. So we need to change this to with useful life. Save it. Similarly for the next method, let us also try to change this one. Let us change this to useful life and this one to return on value using useful life. That means no explicit percentage is mentioned. The methods are active. Now if you try to update this Asset Explorer report, it does not update the values because it says, instead it gives a warning message saying that the depreciation values have been changed. It says the new value has been calculated and please check while you're posting the depreciation. So to avoid this one, let us go to the asset. Let us change the depreciation values. Let us put this as 09 and 08 and try to save it once. Now so that we can again reassign A10 and 11. Okay, we did not change the description, but these are the two that we have updated recently. So now let us go to the asset values. Let us check what is the depreciation. It is 1627.40. So here if you see, it is 1627.40. That means the factor 2 which we entered in the declining balance method is now considered. And here it is falling well within the maximum and minimum percentages, so there was no issue. Now let us check what is the depreciation that has been calculated for the second depreciation area. If you go to the tax depreciation, we see the method is still calculating as 1627. Let us try to identify why. Here when we had percentage from the useful life and there is no percentage, so the value is the useful life is 10 years, and here okay, we got the issue. So here it was now 10 years because the useful life is 10, and so the value of the percentage is 1 by 10, which is 10%. So if this is 10%, then it is similar to what we are calculating here. So let us do one thing. Let us go back to the asset and let us change the useful life only for the second depreciation area. Let us try making it as 5 years so that the depreciation value will be 20%. Save it. Let us go to the asset values. So here if you see, the value has been changed. It is 2034. It's the same as what we have calculated. But although we have taken earlier as 15%, we have still obtained the same because, so what is the percentage now? It is 1 by 5, which is 20%. So 20% into this factor 2 is used 40%. But this 40% is beyond the maximum range. So the system will take 25% as the depreciation percentage. So whatever amounts, the formula we have applied here, which is the acquisition value into 25% by 365 into 297 works valid. So the value is 2034 for the first period and 1991 for the second period. So if you go to comparisons, it is same. So for each and every period, the depreciation value is decreasing. And if you observe one thing between straight line depreciation and between written down value depreciation, the net book value will never become zero in written down depreciation because it is always calculated based on the net book value. For each period, the base method will be the net book value. Only for the first period, it is the acquisition value. So I mean, even then also it is net book value because before posting the first depreciation, the acquisition value will remain the net book value. So the base method, the base value is net book value. So the net book value will never become zero in case of written down values. But if you check the straight line depreciation, as the base value is the acquisition value, after a certain time, there is a chance that the net book value can become zero. So this is one variant of how we are applying maximum percentages and the declining balance factor to the depreciation percentage. So let us try the last variant. So now let me copy this one. Before this, let us check what is the value. Okay, this is 2000. Okay, so go back. Let us go to the maximum amount methods, and we have created a maximum amount. So the maximum amount, let us change to 2000. So that means the maximum amount that the depreciation should be calculated for a particular period is only 2000. So we have mentioned this as annual. That means this 2000 is a limit for each year, but not an accumulated depreciation. So also let us try to create a copy of this one wherein we remove the key and we mention it as Z02. or else cancel. For this method, let us change the amount to 4,000. Save it. Let us maintain new depreciation keys. Let us try to copy A10. This is not percentage. We changed it earlier. It is useful life with factor 2 and maximum amount as 4,000. So now let us add the maximum amount. This one, okay, let us maximum amount is 2K, which is annual. Okay, and the remaining values will be the same. These are all remaining the same. We don't want to change anything. Save it. And let us copy A11. So this is not percentage, this is useful life, and we are having a factor of 2x, and we are having a maximum amount of, let us for this one 4K accumulated depreciation. So let us use the maximum amount key Z02, and this are all remaining the same. Save it. So let us change the asset. Let us go to the depreciation areas and change this to 12 and 13. Save it. And let us check the asset values. So now this all remains the same. I mean, there is a slight difference. The percentage is same, 10%, 25, 5, 20. So the effective percentage is 20%. It is lying well within the range. And the maximum value is 2000. So now what we have obtained is 1627. This is beyond, this is below 2000. So there is no problem. Every year we can calculate this same depreciation amount. So there should not be any change in straight line depreciation area. That means the first chart of depreciation. So in the second method, the value is 10%, which is obtained from the useful life 1 by 5. So it is 20%, and there's a factor 2, and the effective percentage is 40%. So it will take only 25%. So the considered percentage is 25%. And the maximum amount accumulated is 4,000. So for the first year, so what is the accumulated depreciation? So this is equal to this one, this is equal to plus this one, and let us calculate for the third period. So ideally, let us calculate, it should be the net book value into 25%, into 25%, and the net book value will be this one, and the accumulated depreciation is plus this one. So if I don't, but we have already refreshed the asset. Let us check if we did not refresh it. I think we have already refreshed it, or are we having any past one? No, we don't have it. Okay, we have refreshed it, so we cannot see the old ones. But so let us check what is the value that we have obtained for the straight line depreciation. It is 1627.40. Same, it is 1627.40, and this is below 2000, so for every year it can calculate 2000. So there is no change in the first chart of depreciation, that is the book depreciation. So we are correct with our calculations. So now let us go to the tax depreciation. So if we go to the tax depreciation, the first value is 2035. So this is 2035, perfect. Sorry, 2034.25. It is perfect, 2034.25. And the accumulated ordinary depreciation is, the accumulated depreciation is also the same. It is 2034.25, and the net book value is 7965. So when we consider the next year, here, although we received this one, the accumulated depreciation maximum can be only 4000. So what is the difference? Minus 4045. So this is subtracted from this one. So the new depreciation value will be minus this one, 1965.6153, and the new accumulated depreciation is 4000, because this is the limit that we have obtained. This is not percentage, this should be number. Fine. Okay. So this will be remain 4000. So what will happen till the next period? If it's an ideal case where there is no maximum amount applied, then these values which we calculated stand correct. But now there is a maximum percentage, so the depreciation values for that year will remain 0 for that period, and the accumulated depreciation will always remain 4, and the net book value will stop at 5947 plus 25, whatever we get, that will be the net book value of the asset. Let us verify. So 2034 for the first period, 7965 is the net book value, we are right. And for the next one, what we have calculated, it should be 1965, the depreciation. So we are calculating it as 1965.75. So the maximum amount is now coming into effect. So this is the most complex case which we have taken till now. If we are having a factor of 2%, so the percentage is now changed to 20 into 240, but there is a maximum cap. So the percentage is taken only as 25%, but there is also a maximum amount at accumulated depreciation level, which is 4000. So here for the second year now, this depreciation value taken by the system is different than the ideal value which we obtained if there was no maximum amount. And now for the third year, it should be 0, and the accumulated depreciation will remain at 4000. And what is the net book value? Like new net book value, this will be net book value plus this one. I think, yes, let us calculate it in a different way. The previous net book value minus 4000, and this net book value will remain the same because there is no depreciation that is posted. Replace as values. Okay. It should be 3965.75. Let us check. Sorry, we should add this one. We have already calculated this net book value plus 25, which is 6000, and 6000. Sorry, 6000. Why we have added this one? Because if there was no factor, the maximum amount, then the net book value for after this depreciation is 5974.315, and the depreciation is 4025. So this 4025 is 25.68 more than the cap maximum amount, which is 4000. So this is the difference. So now this difference, which is not depreciated, should be added to the net book value. So we obtained 6000. So we can also obtain this one in a different way. This is the total acquisition value minus the total accumulated depreciation, which is 6000. So if we see, the 1965.75 is the depreciation for the second period, and the net book value is 6000. And for the further periods, there is no depreciation, and the net book value will remain as 6000. So this is how SAP calculates the depreciation based on the depreciation keys that we define and various other methods that we configure. Thank you for watching. Stay tuned, subscribe to my channel for further videos on SAP FICO. Thank you.